The Adani Group has been accused of corruption by a US court. Arrest warrants have been issued against the promoter of the energy company from within the group, and summons have been issued by the markets regulator from that country. What does this all mean for the Adani Group? Can they shrug this off and move on as they've done before when such events overtook them? Or is this a moment of reckoning? Hello and welcome back to Business Matters at the Hindu with me, K. Bharat Kumar. The topic of the day is, of course, the Adani Group and the charges of corruption and bribery brought on against them by the Department of Justice in the US. But before we go on to this topic, let's find out what else you ought to know if you're following the world of business. In the IPL 2025 auctions, we witnessed 182 players being sold to the franchises for a total amount of about 639 crore. Rishabh Pant became the player with the highest price tag at 27 crore rupees, the winning bid coming from Lucknow Super Giants. He was closely followed by Shreyas Iyer, who went to the Punjab Kings for rupees 26.75 crore. Interestingly, 13-year-old Vaibhav Suryavanshi from Bihar commanded a price of rupees 1.1 crore from the Rajasthan Royals. Moving on, you ought to know that the frenzy for IPOs or initial public offerings is declining. The last 8 offerings were subscribed only 1.98 times compared with the 49.5 times for the previous 65 IPOs. While those in the government are asking for food inflation metrics to be separated from overall inflation, hoping that that would pave the way for the RBI to cut rates and hence help spur economic growth, the RBI governor recently said that the onus for macroeconomic stability lay with both the central bank as well as the government. And finally, attrition in the PSU banks is running high, and the Finance Ministry has unveiled a performance-linked incentive scheme for senior bankers in order to help retain talent. Now, let's take a granular look at what the charges were that were brought on by the US Department of Justice against the Adani Group. Much of the discussion in this episode we will have comes from facts in the public domain, as well as a series of articles that have appeared in our publications across our group. Between December 2019 and July 2020, Adani Green subsidiary clinched a solar tender from the SECI, or the Solar Energy Corporation of India. The company and its subsidiary were to supply a total of 12 gigawatts of solar power to the SECI, which would sell it to state electricity distribution companies. At that time, high energy prices prevented the SECI from being able to sell power to the state power distribution companies. So it could not execute what are called power sale agreements with these state distribution companies, otherwise referred to as DISCOMs or distribution companies. Without the PSAs in place, the power sale agreements, it could not execute PPAs or the power purchase agreement that the SECI normally does with providers, in this case Adani Green. The allegation now by the US Department of Justice is that the Adanis bribed Indian government officials to nudge them into executing PSAs with the SECI. Once the PSAs are in place, then the PPAs would follow and a business deal could be struck. The Adanis allegedly gave rupees 2,029 crore during the course of this bribery scheme, as the Department of Justice in the US calls it, and this apparently spurred state DISCOMs to execute the PSAs. In the time period that this happened, it is to be noted that electricity distribution companies of Odisha, Jammu and Kashmir, Tamil Nadu, Chhattisgarh, and Andhra Pradesh entered into PSAs with the SECI. Andhra Pradesh's DISCOM entered into a PSA with the SECI around December 1st, 2021, following which the state agreed to purchase approximately 7 gigawatt of solar power, by far the largest quantum by any Indian state. According to the indictment statement issued by the US Department of Justice, Andhra Pradesh government officials received bribes to the tune of $200 million from Adani Green in connection with the power supply agreement made with the SECI in 2021. Now, the question high up in everybody's mind back in India is, does the US have jurisdiction over a crime committed on Indian soil? Some experts believe that there indeed is ground available to the US to file charges, issue summons, and even issue an arrest warrant. The US statement indicates that Adani Green's US subsidiary is said to have owed its Indian parent funds, which were to be used to channel the bribe amount. Plus, Adani Green raised funds in the US from US investors on at least 2 different occasions, which acts allow US authorities the jurisdiction to probe. Following these charges, reactions from around the world have been coming in. Kenya has cancelled a project related to the Adani Group. The Andhra Pradesh government is now said to be likely to cancel a power purchase agreement it entered into with regard to power supply from the Adani Group. Telangana has said it won't accept the rupees 100 crore funds promised by the Adani Foundation for the Young India Skill University.
Yeah.
Now, what legal and regulatory action can the group face from within India? The Competition Commission of India has made it clear that unless there are certain developments that fall under the purview of the Competition Act, the CCI will not get into the picture. But can the Adani Group face legal action? The Central Bureau of Intelligence has in the past registered FIRs to probe corruption that took place on Indian soil but which was unraveled in the US. The agency registered an FIR in February 2018 against officials of the US-based CDM Smith and others on charges of bribing NHAI bureaucrats. Some industry observers insist that the Indian government should seek details from the US Department of Justice and the SEC, or the US markets regulator, so that it could examine the evidence as a precursor to initiating investigation here in India. The more imminent challenge from the Adani Group, though, could come from markets regulator SEBI in India, because one allegation is that the Adani Group could have violated SEBI rules by not disclosing on time to exchanges and to its shareholders details regarding the ongoing investigation into the group by the US. The impact of all this on the Adani Group is evident. The group won't be able to raise funds that easily, especially in Western markets. For example, the very day the charges came out, the bond prices of the group touched a one-year low. On the same day, Adani Green Energy had to withdraw its bond issuance offer, which it was hoping would fetch it about $1.5 billion from the US investors. Generally, when investors in bonds see increased risk, they tend to command a premium. That is, they command a higher interest rate on the money that they lend, which obviously means that the cost of interest payments on these bonds will be much higher for the group. This rise in cost of funds could be aggravated by action from rating agencies. Already, S&P Global, Fitch and Moody's have all revised their outlook for the group, the Adani Group, downward. This is a signal to investors that there is higher risk, which means they should command more interest or higher interest rates. What options does the Adani Group have in front of it, considering that these allegations have come to light? In the best case scenario, it could resolve the whole issue by paying some fines, maybe some hefty fines as other companies have paid in the past in such circumstances. Second, it could admit to certain wrongdoing and then promise to increase compliances across its businesses. But above all else, what one of its investors, namely GQG, does will be watched with keen interest by observers and retail shareholders of the Adani Group firms. GQG bought into Adani firm stocks when Hindenburg Research made allegations of money laundering against the group and its founder in early 2023. When share prices fell then, GQG bought shares that were worth $9.5 billion in the group in October 2024, and now these make up almost 6% of its total assets under management. In its reaction to the latest developments, GQG said that the Department of Justice indictment and SEC action are against individuals only. It also noted that the allegations relate only to Adani Green Energy and not to Adani Group firms. In a note, it said, while the allegations are serious, there are many examples of global companies and their executives who have faced significant government action, including Foreign Corrupt Practices Act violations. Some notable examples include Walmart, Oracle, Thales, Siemens, Glencore, Petrobras, Pfizer, Toyota, Honeywell, Airbus, and SAP. GQG also added that these actions and investigations take years to resolve sometimes and may result in reduced penalties or fines. It noted that in the interim, the businesses continue to operate as before, looking to improve their business practices and focusing on moving their businesses forward. In its note, GQG said, "We feel the Indian government will maintain its support for Gautam Adani as he is the most important infrastructure developer in the country by order of magnitude." That brings us to the section where we share nuggets of information with you as always. Did you know that the World Bank estimates that international bribery exceeds $1.5 trillion annually, or 2% of global GDP, and which is 10 times more than total global aid funds? And the quiz question for this week coming up next. When was the first recorded incidence of bribery in history? And before you think that we've forgotten the answer to last week's question, here it goes. The question was, which country is cited as a success story for ethanol blending with fuel? Between 2010 and 2011, the country's ethanol ecosystem was so large that it helped create 4.5 million jobs. The answer is Brazil. That brings us to the end of this episode. Before you go away, do not forget to like, share, and subscribe if you like what you saw. Until we meet again next week, have a lovely time ahead.